Hello, good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Let's quickly begin with markets. To my left is Suyash Maheshwari. Suyash, good morning.
Good morning, Shweta.
Let's quickly run our viewers through how markets are opening this morning.
Yes, so Indian markets opened, sharply lower this morning, tracking muted trends in the global markets. Now, the recent flare-up in tensions in the Middle East was one of the primary reasons why the markets around the world, are facing some pressure. And it has also led to a fresh rally in crude prices, since yesterday crude prices, Brent crude has spiked up by about 4% and is currently hovering around the $88 a barrel mark. And also we have seen a spike in the 10-year bond yields in US, which are also currently hovering around 4.8% mark. This has created a risk of sentiment in the markets, and as a result we are seeing weakness across the board. Now, looking at the sector, Shweta, apart from the IT pack and the pharma pack, most sectors today have been trading with losses. The IT pack is up over 0.5% and the pharma index is up about 0.2%, whereas all other sectors are trading deep in the red. Among the major losers is the financial space. The Nifty banking index is down about 1% or so, and the PSU banking pack is also down about almost 2% this morning, Shweta. The broader markets are also trading in a weaker note. The small cap index is down by about 1.5%. and the mid-cap index is down by about 1.2%. Now, since the morning's fall, the markets have recovered. Nifty, which had fallen below the 19,500 mark, is currently trading at around 19,566. So we have seen a good recovery playing out in the headliners. The broader market, Shweta, however, have not really staged a recovery. Also, you are seeing a spike in the volatility. The India VIX index, which fell to a 2-month low last week, spiked once again. India VIX has spiked up by about 10% and it is currently hovering around that 11.34 mark.
All right. Thank you for that lowdown. Let's quickly get in Gaurang Shah, Senior VP at Geojit Financials, joining us this morning. Gaurang, thank you so much for taking time out. It's a crucial day. It's start of Monday morning session after the deadly terror attack on the Israeli soil. Global markets feeling the heat.
Thank you, Shweta. Morning to all of you, and thank you for having me on the show. So, it's rather worrying as to what kind of direction this entire geopolitical situation, which has evolved from Saturday morning because of the terror strike by Hamas, Hezbollah on Israel, has led to large number of casualties on life, people getting displaced, hostages being taken, women, children especially. And this is the worst kind of situation that has happened by almost about 50 years since we have known about the Israel-Palestine conflict. As a result of this, what happens is that crude oil prices have seen a bump up. Gold and silver amongst the precious commodities have moved up. What we don't know is how this entire situation is going to unfold, whether there is going to be escalation of the situation that we are currently in, or whether there is going to be any kind of de-escalation, maybe because of interventions of larger developed countries, and world over people have called for de-escalation. This has led to a little bit of negative start, but what I am pleasantly seeing right now on the screen is that we have almost recovered half of the lost ground. Sensex was down almost about 500 plus points. Nifty was down about 140, 150 odd points, and currently we are 250 points down on the Sensex, 70, 75 points down on the Nifty. So there is visible buying coming in. And, in the past history, Shweta, we have seen situations like this as buying opportunity. Of course, I'm not saying that we'll have immediately clarity of whatever has happened in Middle East, Palestine and Israel. It may go on over a period of days, and how it evolves over those days is something that we'll have to wait and watch. But yes, history has told us that whenever geopolitical situation like this have happened, and this is not the first time these kind of situation we are seeing in Middle East. So I hope that wisdom prevails upon world leaders, and instead of firing missiles and bullets, they should sit across the table and resolve whatever disputes are there.
Now, Gaurang, considering the kind of recovery that we have seen in the last half an hour, 45 minutes, where, as you mentioned, Sensex was down about 500 points. Currently, it's down about 250 points, or 250-point recovery. So, do you think that today's fall was just a sentimental crash, perhaps a knee-jerk reaction to, what's playing out in the Middle East?
So, Suyash, we had to react to the world, and even in the morning part when we had not opened up and the rest of the Asia was open, even there we had seen a little bit of deeper red, but good to see the kind of reaction that we are giving out. Uh, so don't, that's what exactly, Suyash, the problem is, that in situations like the present one, that is the geopolitical situation, especially between uh, two countries which have been at the end of wits, uh, and this is, and like I said, we have seen escalation between Israel and Palestine earlier also, but this has taken a ugly turn with the kind of involvement of certain organizations like Hamas and Hezbollah. So remains to be seen how the entire situation evolves. Uh, Hard to say, Suyash, whether what we have seen is the worst. It all depends upon how the situation evolves and in which direction does it go. But probably it will take a couple of days to settle down. But let's hope that wisdom prevails, like I mentioned. Use dialogue, diplomatic platforms and dialogues to resolve issues like this rather than firing missiles and bullets and
Okay.
rockets.
All right. As an immediate aftermath, I want to understand, Gaurang, what are the likely impact on the crude prices? Crude is already inching $90 a barrel. Brent crude this morning, 5% up, 5% low on a daily basis. Literally $5 up, $5 low. Is the volatility now only going to further deepen? What is your immediate understanding of what happens with crude prices?
And why are we seeing this spike, considering that both Israel and Palestine are not major oil producing nations in the first place?
My guess, my assumption is it's the involvement of the Middle East in a war like this that's likely to play up in oil prices.
Well, the biggest fear, Suyash and Shweta, is that let's pray that there is no disruption to the global supply pipelines. And the problem, Shweta, is the involvement of the organizations, like I mentioned, Hezbollah and Hamas. Let's hope. And the fact of the matter is that Middle East is the nerve of global supply pipeline as far as energy requirement in form of crude is concerned. So the spike that we see in crude overnight of almost about 3.5 to 4% was purely because of the news that is there, and the fear of unknown is something that creates this kind of volatility in crude oil prices. Yes, I agree with Suyash that not any meaningful uh, threat to the global supply pipelines, to the current situation of where the entire geopolitical situation is unfolding. But if it has to escalate, then one needs to worry a little bit.
Okay. Any immediate impact on commodity prices? Gold, will people be going for now gold? Safer option?
Since it has corrected to about a 7-month low recently.
Well, so, and of course, not only the geopolitical situations, but I think you have festive and wedding season coming. And in India, we all know how the attraction towards gold is when it comes to festive season as well as marriage season. And yes, it had corrected from almost 60,000 plus rupees to 10 grams to maybe about 56, 500 or thereabouts. And then we're seeing a bump up. And my sense, Shweta, to answer your question both on gold and crude oil is that maybe, that initial knee-jerk reaction is now done and dusted. Now it will depend upon the news flows. Don't see any meaningful jump up or up move in crude oil and gold prices from here, unless and until we have some huge negative news flows. So expect to stay here and possibly cool off a little bit.
All right, and since we're talking about the macro need for gold, we also know festive season is around the corner, but this month is all the more crucial. This week particularly is going to be decisive in many, many ways, not just the inflation data that will come out, but also we are expecting results season to kick in day after tomorrow onward. Gaurang, what are your big expectations apart from what's happening on the markets as far as sentiments is concerned, owing to global upheaval that is playing out majorly in Middle East? What happens as far as domestic cues are concerned? Domestically, we're still looking very strong. Do you think the markets will react to that news as well?
Shweta, over the last maybe about a month and a half or 2 months, our markets have been all over the place. 1st of September, 19,260 to 20,200 on maybe 14th or 15th of September. And from 18th September, from the 20,200 levels, we've been to 19,250, I think, very recently, end of September. And from there, we've seen a little bit of recovery. Earnings season, our sense at Geojit is that let's hope that there is a better color and shade than what we've seen in the first quarter of this financial year. Uh, Erratic monsoon may play a little bit of overhang on certain sectors with respect to volumes and demand. For example, FMCG and consumer durable, possibly entry level two-wheelers and entry level four-wheelers and compact sedans. Uh, Discretionary, non-discretionary spend is what may be a little bit under the weather when it comes to volume growth and margins. I believe our sense at Geojit also, Shweta, is that banking and finance will do extremely well given the outlook on the second quarter advances and deposits that have the reported. Fundraising is something that has given us more optimism in terms of loan book growth for NBFCs and banks. Star performer as far as sectorial pick for second quarter, according to us, will be banking and finance, followed by possibly autos. Then you will have to see possibly a good number from FMCG companies, subject to, of course, monsoon. Distorted monsoon doesn't play a spoil sport. And cement amongst the commodity plays is something that we expect to do well. Only one sector that I personally feel should uh, do against what the market is feeling is IT. Let's hope that there is a better story over there.
Okay.
Gaurang, what's your expectation on IT? Because we are getting a lot of mixed cues. JP Morgan came out with a report on Friday. I think it said that, it expects IT to have a washout year. We have Morgan Stanley on the other hand, raising price targets, sharing a bullish outlook, expecting recovery to play out in the second half of the financial year FY24. What's your expectation here?
So it's good to see these kind of views, conflicting views, Suyash. But we are going in with an absolutely, normal expectation. Not to forget, post first quarter, there have been a couple of IT companies who have announced big deals. We are not saying that they will translate into revenues in the second quarter because it is just some time back that these deals were announced. But, you know, the need for upgrading IT environment and platforms which are operating, keeping in mind artificial intelligence, keeping in mind cyber security, keeping in mind the kind of attacks that take place, cyber attacks that is. So possibly you might see elevated level of demand from Indian IT companies, both locally and globally. So we are going with a neutral kind of bias for IT companies. Mid-cap IT is something that may possibly surprise us on the pleasant side. And I think immediately from a short to medium term point of view, any kind of announcement on buybacks will lift the sentiments on the positive side momentarily. Like we are, reading reports that possibly TCS would announce one more buyback. They've done a couple of them in the past. So that may possibly elevate the mood from a short to medium term perspective, depending upon what the level of buyback is.
Gaurang, talking about buybacks, in fact, TCS, it looks like the board is looking to, approve a buyback and conduct a buyback with its, September results, which will be out on October 11. The stock, in fact, has, also touched a 52-week high very recently. Has shown performed fairly well in the last 5-6 days. It's up about 2.5% or so. In the course of a month, it has run up about 10% or so. So, what's your outlook on TCS and other bellwether IT stocks?
Let me give you a list of stocks that we are positive on the fundamental side, long term. TCS, Infosys, Tech Mahindra, HCL Tech amongst the big boys. Midcap, KPIT Tech, Tata Elxsi, Science Limited, Coforge, Persistent Systems. LTI Mindtree is under review right now. So we had a buy call earlier, but it is under review right now with the research team. So these are the names that we remain extremely positive on. As far as buybacks are concerned, I think I don't know. This may be the fourth or the fifth buyback announcement from TCS. The last one, if my memory serves me right, Suyash, was at about 3,800 when the share price was 3,200. So these things may excite the market. Buybacks may excite the market for all those short-term players who would want to take advantage of that spike. But long term, we remain positive on TCS. Since the second quarter earnings is virtually on the horizon, I would not like to comment on the targets because we may revisit the targets as and when the numbers unfold.
Now, a lot of mid-cap stocks focus in that list that you just gave us. So, overall, more bullish on the mid-cap side than the large caps?
Because of the price performance again, Suyash, in terms of numbers, purely, just look at the kind of outperformance mid-cap IT companies have given you. And of course, not only in terms of earnings, Suyash, but also in terms of, if you had invested in mid-cap IT, possibly you would have ended up gaining more in terms of profits compared to the large cap IT. And, there has been M&A activity. One big activity we saw a couple of months back, LTI and Mindtree coming together and forming one of the fifth largest companies in terms of product services, headcount, and market capitalization. Possibly, maybe it must have grown even to a higher level in terms of market capitalization. And the re-rating of mid-cap IT companies on fallback of good numbers has always been a driving force, and that's one of the reasons why we also would first prefer mid-cap IT and then possibly look at large cap IT.
Gaurang, also want to get your view on the banking pack. You expect, the banking stocks, banking companies to have a good Q2. Now, ICRR of 10%, which was, imposed on August to suck out excess liquidity, has been completely rolled back. Do you think that it will provide a fresh boost to the banking stocks, given that, it improves their earning visibilities as they are able to give more loans out?
So my sense is that first of all, I'm quite pleasantly confident about the steps the RBI takes as and when it is appropriate and necessary for in case of that 10% additional requirement. 7th of October was the last date. Last week, that was when the entire additional requirement was withdrawn. More importantly, Suyash, a lot of NBFCs and banks have shown interest or have already started to go out to the market to raise funds, indicating a very strong credit demand going into the future. So my sense is that, and like I mentioned, a while back, on fallback of whatever announcements on the Q2 advances and deposits, including along with that, Kasha ratio has been on a better side, and loan book growth has been. I mean, just for example, Bajaj Finance raising more than 8,000 plus crores, not just to sit on it, but for sure, to disburse it via its loan book. So when you have these kind of announcement and of course advances and deposit numbers, it gives you a kind of a comfortable feeling that banking and finance is something that will always be in the spotlight for a pretty long period of time. And one more thing, Suyash, if India has to become the next $1 trillion economy, I think there's going to be a huge contribution from banking and NBFCs, which would be required to come through.
Now, another stock that I was tracking, Shweta, this morning was MCX. MCX has finally received...
Gotten a go-ahead?
Finally got the go-ahead from SEBI for the launch of its new commodity derivatives platform. If you remember, back in, I think late September 29th or so, SEBI had asked MCX to put that, platform on hold, given that there were technical issues, and as a result, we saw some correction in the stock price. But MCX has gotten that go-ahead. Finally, the stock was trading up about 3 to 4%. This morning on Friday, it gained about 5% or so. And we have seen a good run-up in the stock of MCX over the course of last month. I think it's up about 20% or so.
All right, MCX is another stock that we're tracking, and Reliance is
Retail,
also
yes.
in the
So
news.
Reliance has, ADIA, which is the Abu Dhabi Investment Authority, has decided to invest 4,966.8 crores in Reliance Retail for a stake of about 0.59%. Now ADIA will like the fresh investment gives the enterprise value of Reliance, gets the enterprise retail value of Reliance Retail to about 8.39 lakh crore. And we have seen Reliance Retail especially getting big ticket investments over the course of the last couple of weeks. First it was KKR, which pumped in about 500 million or so, and then it was QIA, which pumped in about $1 billion or so, around that same enterprise value of about 8.3 lakh crore, about $100 billion. In fact, if you look at the first time that these companies invested back in 2020, the overall value of the Reliance Retail company was pegged at around $4.3 billion, so 4.3 lakh crore. So in the span of 3 years, the overall market value, the net worth of Reliance Retail has doubled. But we are not seeing any uptick in the stock of Reliance Industries. It's still hovering around that 23,000-2400 mark, and it doesn't seem that these fresh investments have provided that fresh impetus to the stock, because the stock has been largely range bound.
All right. No Philip Gaurang to the RIL stock on the back of retail, ARM doubling its value from 4 point some lakh crore to now 8.39 lakh crore.
So firstly, a disclosure, we have a positive coverage on Reliance Industries, Shweta, fundamental side from a long-term point of view. And all these investments that are coming through are with a objective of the future businesses that RRVL, that is Reliance Retail Ventures Limited, wants to go and execute at ground level. So money coming in is one thing. Not necessary that stock has to react immediately, because share prices will reflect what the company has reported in terms of earnings. And when the businesses are just on the paper or blueprint, and business strategies are yet to be executed at ground level, when it comes to these kind of funds coming in, it will have a longer term positive impact. Money coming into a particular company doesn't necessarily mean that share price has to react. That money has to create profits, right? Only then the share prices will get appreciated and re-rated upwards. So I'm quite sure with the kind of funds that they have gathered for the retail venture, and of course the plans that they have, how to take this at ground level and execute it at ground level, it will definitely add value, but it will take time.
All right. And before I let you go, Gaurang, any big stocks you're tracking on the back of geopolitical tensions in the Middle East? Any stocks that are likely to show some sort of impact today?
Well, difficult to gauge the stock reaction, but my sense, Shweta, just kind of a hinge. My sense is that because of this fallout of the geopolitical situation in the Middle East between Palestine and Israel, I think defense-related stocks will definitely be in focus for a pretty. They have been, not that they haven't been, but these kind of situation will always, give you a thought process to every country, not only India, as to how to secure yourself and arm your armed forces for any kind of unpleasant situation. So, and of course, on the numbers front also, I didn't mention about the defense sector, but Q2 numbers on fallback of whatever order books they've got and the execution that has been done. I think defense sector should report a decent set of number, and also on fallback of what has happened in Middle East. My sense is that defense sector will be in spotlight for a pretty good long period of time.
All right, defense sector it is on the back of the geopolitical tensions that are unveiling in a big way, in fact, over the course of last 48 hours. Gaurang, thank you very much for taking time out. Thank you for joining us this morning. And to you too, Suyash, thank you so very much.